Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending July 22nd, 2022. Looking at the indexes for the week, the TSX, Russell 2000, S&P 500, NASDAQ and Dow Jones were all up on the week. Oil was down a couple of dollars, finishing at $96 per barrel, and gold was up for the week. This has been the best week of 2022 for stocks. On Wednesday, StatsCan reported the Canadian CPI at 8.1% year-over-year inflation for the year ending June, lower than 8.4% that was expected, and so the TSX was up a little on the news Wednesday morning. This is still higher inflation than the year-over-year for May, which was 7.7%. For the June number, gasoline inflation was at 6.2% for the month, and this was a big part of the increase, while food rose just 0.1% for the month. Consumer price inflation accelerated in June to the highest level since January 1983, but there are hints that inflation may be plateauing. The bond yield curve was inverted for the 2-year and the 10-year bond yields, and this is not good for banks. It means that banks theoretically pay more interest for savings account interest than they get in loan and mortgage interest. In practice, this isn't true, but their margins are lower, causing them to lend less and only to low-risk borrowers, possibly slowing down the economy. There is a trend of high inventories in retail that will cause the retailers to lower prices to liquidate the inventory. This happened when the stores double ordered goods during the supply chain caused shortages. Real estate prices are down in Canada by 14% since the February peak. Fewer high-priced homes are selling. This is a Canadian real estate correction. The mortgage stress test has taken many buyers out of the market as well. The Bank of Canada estimates that GDP grew by about 4% in the second quarter of 2022. Growth is expected to slow to about 2% in the third quarter as consumption growth moderates and the housing market activity pulls back following unsustainable strength during the pandemic. The bank expects Canada's economy to grow by 3.5% in 2022, 1.75% in 2023, and 2.5% in 2024. Economic activity will slow as global growth moderates and tighter monetary policy works its way through the economy. The strong US dollar is going to be a headwind for US multinational or international companies who make money elsewhere and report it in US dollars. The US dollar has appreciated over most world currencies because it is a safety currency that people go to, and it is raising its interest rates as well. The USD has appreciated over the Canadian dollar also, but the Canadian dollar has held up better than most other currencies. In the US, we had the initial jobless claims rise to 152,000, the highest level since November. And there is a lot of negative news and possibly a mild recession already priced into the market on both sides of the border. Historically, however, a bad first half causes a outperforming second half. Looking at China for a minute or two, China is having some real estate defaults and their central bank has to step in. There is the lowering of interest rates because the Chinese economy is slowing and needs help and support. The zero policy on COVID and resulting lockdowns aren't helping. Europe may be in an outright recession as well. So as China's GDP is shrinking, it has posted its worst economic performance in 2 years. The country's quarterly growth slowed to 0.4%. Like many other countries, China is dealing with a potential recession. The pandemic hurt global trade and lockdowns crushed production, especially in China, which has the strictest lockdowns. Now, the world is looking to rebound, slowly but surely. Last year, China was leading top-tier economies in its rebound from the pandemic. but its government increased lockdown restrictions last quarter, adding another setback to its growth. China is also dealing with an interesting housing crisis of its own. Thousands of Chinese home buyers are threatening to stop paying their mortgages. China's real estate sector is dealing with hundreds of unfinished housing projects also. Buyers in those complexes have taken to social media to say they will stop making monthly payments until developers complete their projects. This situation creates huge risks for banks and China's debt-riddled property developers. Demand for housing is expected to drop 2.5% between 2021 and 2035. China's aging population is the main reason for the decline in demand. In other news, the European Central Bank raised interest rates 0.5%, more than expected this past week. Looking at next week, on Monday, we have earnings for Element Fleet Management. On Tuesday, Microsoft, Alphabet, Visa, McDonald's, UPS, which is a bellwether for the US economy, Canadian National Rail, General Electric, and General Motors. On Wednesday is Meta, Boeing, Rio Tinto, Airbus, Shopify, Ford, Rogers, Tech Resources, and Cameco. On Thursday is Apple, Amazon, MasterCard, Pfizer, Intel, Canadian Pacific Rail, Enbridge, Baidu, Synovus, Constellation Software, Intact Financial, and Fortis. On Friday, we can look forward to Exxon, Procter & Gamble, Enbridge, Magna, and finally TELUS. Next week's economic events. On Tuesday, US has the House Price Index. On Wednesday is the US Fed interest rate decision with a 0.75% expected, but it could possibly be 0.5% or 1% as well. Thursday, we have the GDP in the US quarter-over-quarter report, and on Friday, Canada has its month-over-month GDP. That concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.